Hello and welcome to the October-November Smart Trading Bi-Monthly newsletter. The markets have continued to be very rewarding with the bullish moves that have been happening. While the US has broken to new highs again, the Aussie is still trying. So let me share with you how the charts look and a few of my trades. But before I get started, I just need to remind you that I'm not licensed to provide any personal investment advice. This video and all the charts and trades I share are for illustrative purposes only, and I'm just showing you how I view the current market and sharing this with you. Now, as you know, if you've been following my videos, I trade two main systems. A long-term weekly system that has the goal of staying with healthy shares for as long as they're going to be healthy for. And that one I could hold positions from a few weeks right up to a few years. And I'm going to focus this video on my weekly system just to show you what's involved in building a long-term system, because it does take time and you're going to take some losses as well along the way, and you're going to have trades in different positions within your portfolio. Then I've also got my medium-term daily system, which is a swing trading system that trades both long and short in the market. And that one I can hold anywhere from a few days to a few weeks. It doesn't have a long-term hold time. Now, I teach all my trading systems and strategies in the Ultimate Smart Trading Mentor course. So if you want to find out more about that, head on over to my website. Okay, so here's Metastock. And just so you know, Metastock has now released version 17. So I am using version 17 at the moment. There's not much difference between versions 15, 16 and 17. There's a few updates in there, and I will be recording a video on the updates for anybody that is upgrading, so that will come out soon. So on the screen here is the S&P 500. This share, as you can see, well, it's not a share, this index is in blue sky territory. I'll zoom all the way out for you. This is the full history of the top 500 stocks over the US market. And of course those stocks do change in and out of this index. So it's not always reflective of the same stocks all the time. You can see here where it had a really big dip back in December, and all the markets did that. But then the health came back in and it moved up to equal highs. Then it broke to new highs here, stored for a bit, and it's broken to new highs again. So it's still been very strong, nice and healthy since its long-term pullback, which is also just a long-term pullback to a very long-term uptrend line. Now if we have a look at the Aussie market, here's the ASX 200. Now I'll zoom all the way out of this one. Its last highs were made back in 2007 before the GFC hit. So unfortunately the Aussie hasn't been able to push beyond like the US market has beyond that point, but it is trying again. So it's managed to get up to it. You know, it had its falls in December as well, managed to get all the way up to it, and now it's stalling at the moment. So it is still moving upwards in a higher moves each time, but pulling back as well. So it'll be interesting to see whether there is enough power for it to push through and for the Aussie to finally be in blue sky territory. Time will tell. Now, as mentioned, I want to focus on my weekly trades with you because I want to show you, a weekly system takes time to build and evolve. My daily swing trading system, I'm in and out of shares all the time. And I share my trades with my mastermind members. So anybody that does my Ultimate Smart Trading Mentor course receives 1 year membership to my mastermind. And I keep my mastermind clients updated with long half-an-hour videos each month. We have a mastermind forum and we undertake a few webinars a year. So on the screen here, this is Zip Pay. Now I want to show you an example of a long-term share that I've had that has now hit its stop, and one that I have taken advantage, maximized on and built into. So Zip Pay I entered into on the 15th of February. And I had shared this trade with you in previous videos, so it's not the first time that you're seeing this if you have been watching my bi-monthly newsletter updates. When it came up in my weekly trading system, it moved very strongly. It offered a share purchase plan at $1.53, which I took the opportunity to take up and use that as an opportunity to pyramid and buy more of the trade. So I was able to add a second pyramid through a share purchase plan. It then moved higher. It then met my rules to buy some more. So I entered again, and this time at $3.23. So if a share proves itself to me and shows strength in my trading plan, I can buy more of them when they hit certain price points. And that's exactly what I did. It then didn't do a whole lot, and then it took off and charged up. I was in a position where my trade for all my 3 pyramids had more than doubled. I was waiting for some weakness to sell out half because I have a strategy where I can sell half under certain conditions. I sold half when there was clear weakness showing in the daily chart, and I held the remainder of the trade until the stop loss was hit. And it actually collapsed through $4 with the remainder of the trade. So that's a beautiful trade, and we would love every trade to be like this, but unfortunately they're not. So I held this trade for 257 days, and it was over 20R multiple win. I made 20 times my risk size on this trade. I want to make sure that no losing trade, I lose more than a 1R loss on it, but winning trades, you need some really big winners out there to make up your portfolio and your profits for the year. So this was one of my really big winners that will make up for the small losses, the small profits that you mostly break even on, and then you'll get some outstanding trades in there that are the rewarding ones. But you have to maximize on them, and you have to continue to add to them and hold them. If you cut them too early, you're not going to get that big win in there. So that was a 191% return on that trade. Now, as mentioned, not every trade is going to turn out like this. And unfortunately, we don't know which ones they are, so we have to buy into a series of trades, following rules and managing total open market risk, and then cut the ones that don't perform well. So this next trade I'm going to share with you, which is Smart Group, it was a share that had been very healthy in the past, fell quite strongly and got support around a previous resistance level. Then it gapped up with a beautiful gap move. I waited and watched to see if it was going to continue, which it did. I entered into it. It did continue a bit higher, and my stop loss moved up. It initially started lower, but unfortunately it gapped down, and it hit my, it didn't hit my stop, it gapped my stop loss. So I took a loss on this one, but I didn't lose more than my 1R, because fortunately I was in a position where I'd bought at $11.56. It had moved higher to $12.50. My stop loss had moved higher as well and was just sitting under $11. But it fell quite strongly that I ended up taking out of this trade at around my initial stop loss, where my trade would have started from. So I was taken out at $9.74 because when I opened this trade, I kept my stop loss below $10, below that nice round number. And then I was actually stopped out near that price point. So I held that for 76 days and I took a negative 0.88R multiple loss on that one. But I still kept it small. It could have been a lot larger than that if I stay in it, and if this share continues lower, let's say it goes down to $8, $7 and so on, that loss could get a lot bigger. So I've cut this trade automatically because I'm sold out of it with my broker, because all my stop losses are set with my broker. Whenever I open a trade, the stop is automatically set. So the action is taking care of it for me, and I will be sold out if it crosses that price point. Unfortunately, if there is a gap, I'm going to get sold out below the price point. If it closes below it at any stage, I'm stopped out. With CFDs in my swing trading system, I can set guaranteed stop loss orders, so I will never be stopped out on slippage like that. If that happened and this was a CFD swing trade, I would get out at my stop up here because I paid a small fee to guarantee that exit. But I can't do that with my share trading. So that ended up being a negative 16.19% loss on that one, which I held for 76 days. Now, as mentioned, you're going to have trades in a weekly long-term portfolio in different positions. So this is a new one that I've just added in on the 25th of October. The share had been healthy in the past, fallen away, come up, started to pause, and broke out, and it came up in my system. When I say my system, when I ran my scan that week on the weekly long-term system, this share had come up. So I liked what I saw, I entered into it, and that trade is still open. I have no idea what's going to pan out with this one at all. So that's why I'm tracking a stop loss, and the market will tell me when to get out if it fails. If it continues, I will continue to move that stop loss up. So that's a new trade that's been added with the weekly system. This is a trade that I've been in since the 23rd of May, which I'm now ready to pyramid into. So you're going to have some new ones, you're going to have some ones ready to build into. So I entered into this one on the 23rd of May at 28.48. I've received a couple of dividends. It's moved slowly, and you've got to be patient with a long-term system. And just this week, it's broken to blue sky territory. And I'm now in a position that if it continues a bit higher, I'll be able to buy more. This is another example of the same thing. This is only a fairly new one, but it's moved up quite quickly. So while the other one I just shared with you, I have to be a bit more patient with to wait. This one I entered into 29th of August at 3.07. It's moved up quite quickly now, and if it does continue above $5, I can buy more and pyramid. So you'll have some that are slower than others, and that's why you need to be patient, and you don't know what's going to unfold. And I don't want to exit them earlier either, because I could be cutting a big winner in there. Now this is an example of a trade that I have pyramided into. It was a share that had been healthy in the past, fell back to a support level, and then started to show some health, came up in my scan, entered into it. It's moved higher, so I've bought more. It's moved higher again, and I'm in a position where I will be able to add a third time to this one. And as you can see, I received some dividends along the way. So that gives you a good idea of what to expect with a long-term system. Things happen a lot quicker with a daily swing trading system. You're in and out, you're taking losses, you're taking profits. But with a weekly system, you've got to allow them time for them to build. And the strong ones will continue building, and they're the ones you want to add to. The weak ones you get stopped out of, you get rid of, you keep your losses small. And you'll build up a portfolio of shares that are all at different stages at different times. Now all this information should be in your trading plan. You should be guided about when you're going to do things in the market. If you don't have a trading plan, then check out my book, Smart Trading Plans. It's available in Kindle version from Amazon, or you can purchase it from my website and I'll post it to you. And if you haven't been to my website before, make sure you check it out, smarttrading.com.au. There's a free special report that you can download and get my top 10 mistakes that new traders make. And you will get an email when a new bi-monthly newsletter video goes out. So thank you for watching my video update. If you have any questions, my contact details are in the Contact Us area of my website. Goodbye for now.